Good morning. I hereby welcome you to this hybrid meeting and declare this 104th Annual Ordinary General Meeting of the shareholders of the South African Reserve Bank duly constituted in terms of the regulations framed under the South African Reserve Bank Act number 90 of 1989 as amended. As stated in the notice of the meeting, the SAP is continuing with the renovation and construction project of its head office in Pretoria and has temporarily relocated to an office in Centurion. Due to the limited space available for conference facilities at the temporary premises, the SAP considered the Council for Scientific and Industrial Research as a suitably conducive and accessible venue in the Pretoria vicinity. I would like to thank the shareholders for their understanding. Please be advised that this meeting is being recorded for future reference if required. The meeting complies with the Protection of Personal Information Act number 4 of 2013, as shareholders were requested during registration on the Lumi Technologies South Africa proprietary limited platform to consent to the SAP Lumi collecting, collating, processing, and storing their data. Before I start my address, since this is a hybrid meeting and we have shareholders attending in person and online, can I ask if everyone attending in person has signed the attendance register? If you haven't signed, the register is available. Please do make sure that you sign. Even if you are not a shareholder, please do sign the register and also indicate whom you are representing to ensure that we have a complete attendance record of the meeting. All shareholders present in person who hold 200 or more shares in the SAP and who are entitled to vote in accordance with the provisions of the SAP Act and its regulations should be in possession of an electronic voting device. Please indicate if you are a shareholder entitled to vote but have not yet registered or received a voting device. Please note that only shareholders or their valid proxies will be permitted to speak during the formalities of this meeting. Every shareholder should have received a yellow laminated card on registration. This card must be raised for identification purposes when a shareholder wishes to comment or ask a question at this meeting. Likewise, any shareholder attending this meeting online who holds 200 or more shares in the SAP and who is entitled to vote in accordance with the provisions of the SAP Act and its regulations should vote in accordance with the instructions as outlined in the notice. Shareholders are eligible to ask written questions related to the business of the meeting by selecting the meeting icon and typing their message in the chat box at the bottom of the messaging screen. Messages can be submitted at any time prior to a matter being put to the vote. Shareholders can also participate and ask questions using the virtual microphone option. You will be required to dial into an operator using the number provided in your access email. The operator will verify the eligibility of the shareholders, and once I invite a shareholder to ask a verbal question, the operator will unmute the shareholder. Shareholders will be able to continue listening to the meeting while in the queue to ask a verbal question. Shareholders' questions will be answered during the meeting, and both the questions and answers will be recorded in the minutes. However, should questions from shareholders be received after the closing of the poll and the question time, they will be responded to directly via email. Are we clear? Are all the shareholders having their yellow cards? You need a voting device. You didn't get a voting device. Can you? And he has got a yellow laminated card, which means that he is accredited as a shareholder. can we make sure that he gets a voting device? Okay, they will bring the. Are you taking? Okay. Okay, then I'm going to wait for him. Well, please allow me to introduce my colleagues who are joining us today to answer any questions that the shareholders may have. They are, firstly, Deputy Governor Fundi Chasivana, Deputy Governor Rashad Kasim, Deputy Governor Mampo Mudise, Chairperson of the Audit Committee, Mr. Norman Mbazima, Chairperson of the Remuneration Committee, Dr. Yvonne Muthian, Chairperson of the Board Risk and Ethics Committee, Mr. Zoeb Hussein, Chairperson of the Non-Executive Directors Committee, Ms. Lerato Mulebazi, the General Counsel of the SAP, Ms. Rebecca T., and Secretary of the SAP, Ms. Zoliswa Kupiso. At the 2023 AGM, I reported that the term of office of Dr. Terence Nombembe as South African government-appointed non-executive director had expired on the 15th of July 2023. Dr. Nombembe had served 3 terms and was no longer eligible for reappointment. The President of the Republic of South Africa has filled the vacancy by appointing Ms. Koleka Mzondegi as a South African government-appointed non-executive director to the sub-board of directors for a period of 3 years with effect from the 23rd of September 2023. My second term as governor was set to expire on the 8th of November 2028, and in March this year, the President reappointed me as the governor for another 5-year term with effect from the 9th of November 2024. The terms of office of Deputy Governors Fundi Chasivana and Rashad Kasim were due to expire on the 31st of July 2024. The President has also reappointed both Deputy Governor Chasivana and Deputy Governor Kasim for another 5-year term with effect from the 1st of August 2024. Following the resignation of Mr. Kuben Naidu as Deputy Governor with effect from the 1st of December 2023, the President appointed Mampo Mudise as a Deputy Governor for a 5-year term with effect from the 1st of April 2024. Now, allow me to move on to my formal address. After another momentous year, today we convene the South African Reserve Bank's annual ordinary general meeting. In April, we marked 30 years of South Africa's still young democracy. It has been an extraordinary 3 decades with a global financial crisis rivaling that of 1929, a catastrophic health pandemic, as well as our own ongoing struggle to develop a new democratic dispensation to better address our legacy of inequality and poverty. Despite these many challenges, the recent national and provincial elections have underscored our resilience as a society with the ushering in of a new government of national unity. While the SAP has been in existence for over a century, it is our democratic constitution that sets its current mandate to protect the value of the currency in the interest of balanced and sustainable economic growth, and to do so without fear, favor, or prejudice. I'm honored to be part of a renewed leadership of the SAP with the Deputy Governors Fundi Chasivana and Rashad Kasim being reappointed and Mampo Mudise filling the vacant Deputy Governor role. Our track record notwithstanding, we continue to face enormous challenges, but trust we will be supported by the dedicated staff of the SAP and its subsidiaries. With this in mind, I now turn to our economic outlook. The global economy continues on a long recovery path from the pandemic. This path has been a troubled one, and despite better prospects in recent months, remains beset by risks and vulnerabilities built up during the pandemic. Inflation remains stubbornly high, and public debt levels globally are at record levels. Technological development carries both risks to cybersecurity and the hope of large and sustained boosts to global productivity. Meanwhile, July 22nd appears to have been the hottest day on earth in recent history. In short, we are entering an era of new economic challenges, even as the recent ones have yet to be overcome. There is little fiscal or monetary policy space available to deal with the risks that could emerge to financial stability, renewed inflation pressures, or even the growing challenge of climate change. Inflation remains a major policy concern for central banks globally. Although global inflation declined from 8.7% in 2022 to 6.8% in 2023 and continues to ease in 2024, it remains high relative to the 2 to 3% inflation targets that many countries are trying to achieve. Restrictive monetary policy, along with the recovery in supply chains and other pandemic-related bottlenecks, has helped inflation to recede from its 2022 highs. However, global disinflation has slowed recently, as is well illustrated by consumer price inflation in the United States, still sitting at 3% relative to their 2% target. The slow pace of disinflation reflects a pattern of lower imported inflation, but higher services inflation across most economies. In sum, rising wages and sustained pent-up demand for services has been key factors. In emerging markets specifically, fiscal challenges and sustained currency depreciations have played more of a role. Policy commitment to reduce inflation back to targets has been strongly signaled around the globe, and central banks have generally been cautious in their approach to policy. Deepening geo-economic fragmentation, higher temperatures, and other supply-related risks raise concerns about the long-term prospects for inflation, and considerable effort is going into assessments of neutral real rate levels. While inflation remains higher than desired, global economic activity has proven to be more resilient than expected. Global growth surprised higher at 3.3% in 2023, despite considerable divergence in growth across individual economies. Generally, however, global growth rates are expected to remain below pre-pandemic trends. This reflects the impact of protectionist measures on global trade, relatively tight financial conditions, as well as uncertainty of future policy trajectory. Greater stability in global affairs and more sustainable fiscal policy settings across the G20 countries would help to dampen uncertainty and enable longer-term horizons for policymakers, firms, and households. While lowering debt levels weigh on growth in the short term, the longer-term effects of falling borrowing costs act to improve growth prospects, supporting private investment and freeing up fiscal space. Lower inflation would also open monetary policy space and support easier credit conditions, complementing the fiscal actions. The SAP forecast trading partner growth to remain moderate in the medium term, hovering around 3%. On the domestic front, despite varied sectoral performances, output in the South African economy slowed to 0.7% in 2023 from 1.9% in 2022 and remains well below growth in peer emerging market countries. Load shedding and logistical challenges have been weighing heavily on economic activity, depressing the credit appetite of businesses and the spending of households. Despite such weak growth in output, however, employment levels have recovered the 2.2 million jobs lost during the height of the pandemic. As of the first quarter of this year, total employment levels surpassed its 2019 level. Nonetheless, job creation has been too slow and not enough to offset the growth in the labor force, leaving the unemployment rate elevated at 32.9% in the first quarter of this year. South Africa's tailwind for growth coming from strong terms of trade continued to fade, despite still remaining at historically good levels. Exports also suffered over the past 12 months from energy and logistics challenges as much as price factors. Imports were also muted by logistics. As energy and logistics constraints continue to ease, the growth outlook will also improve. The domestic economy is expected to grow by 1.1% this year, rising to 1.7% by 2026, as both household spending and investment start to strengthen. Moving to domestic inflation, as with the global trend of moderating inflation, South Africa's headline inflation decelerated over the past year, falling from 6.9% in 2022 to average 6% in 2023. These annual averages, however, hide the ongoing volatility in the underlying components of inflation, in turn demonstrating the risks and uncertainty marking the disinflation path. Since September of last year, headline inflation has been fluctuating between 5% and 6%, with frequent monthly setbacks coming from fuel, food, and services prices. In February, core inflation rose by 0.4 percentage points to 5%, propelled sharply higher by medical insurance inflation. Encouragingly, as of June, core inflation has moved to 4.5%. The SARB sees core inflation averaging 4.6% this year from 4.8% last year. Inflation expectations eased in the first half of this year, but still remain well above the midpoint of the target band. While headline inflation came out between 5 and 6% for much of the past year, our current forecast shows it easing to 4.9% this year, pulled lower mainly by softening food and fuel inflation and resting at the midpoint in 2025 and 2026. Even with more quantitative and qualitative adjustments to risk perceptions over time, the Monetary Policy Committee has felt it appropriate to maintain the repo rate at 8.25%, a level set in May of 2023. Turning to financial stability, the SARB continued to ensure that the financial system remains resilient without any systemic threats materializing during the 2023-2024 financial year. This is despite the risks to the outlook that include sustained geopolitical tensions, sticky inflation, and government debt levels that remain uncomfortably elevated globally. These risks have coincided with an unprecedented number of national elections around the world, leading to some uncertainty and heightened market volatility. South Africa is still confronted with its government's growing debt levels and ever higher debt servicing costs, as well as domestic financial institutions' high exposure to that debt. The SARB continues to monitor this sovereign financial sector nexus closely. Though we are working hard to exit the Financial Action Task Force grey list, the effects of being grey listed are being felt as foreign counterparties apply greater scrutiny to our domestic institutions. At the same time, the impact of climate change is becoming more frequent and more severe, as highlighted by the recent winter storms that lashed at least 4 provinces and necessitated the declaration of regional states of disaster. As part of its ongoing efforts to understand and mitigate the risks, the SARB conducted its first comprehensive stress test of South Africa's major insurance companies, which included a climate change component. Going forward, climate-related risk will increasingly feature as part of the SARB's stress testing scenarios. As of the 1st July 2023, the SARB became a resolution authority and is now obliged to develop resolution plans for systemically important banks and insurers should they fail. Accompanying this was the launch of the Corporation for Deposit Insurance, a new subsidiary of the SARB with its own board of directors and investment committee. CODI manages the country's first deposit insurance scheme and covers qualifying depositors for up to 100,000 rands if their banks fail, or is liquidated or placed into resolution. These milestones will bolster trust and confidence in the financial system and strengthen its robustness. The regulatory and supervisory work of the Prudential Authority goes hand in hand with our financial stability efforts. When it comes to the banking sector, elevated levels of inflation and rising interest rates have been eroding the disposable income of households and the profitability of businesses, resulting in a rise in impaired advances for banks. The PA will continue to monitor the credit risk management practices of banks and make sure that prudent financial and risk management practices are put in place to weather any storm that may arise. In its work to safeguard the interests of the depositors and policyholders, the PA placed 2 institutions under judicial management, while it continues to monitor several institutions that are in various stages of resolution because of financial and governance-related matters. These challenges aside, the PA has supported efforts to grow a more diverse financial industry, having licensed 1 bank during the period under review, with 5 more in progress. 4 new insurers, 3 life and 1 non-life, were registered, with a further 11 applications in progress, 6 of which are life insurers. 2 cooperative financial institutions were also registered, with a further 2 in progress. The Prudential Authority and the Financial Surveillance Department are driving the SARB's efforts to get South Africa off the FATF grey list. FATF has identified 22 action items that South Africa must address to improve its anti-money laundering and combating the financing of terrorism regime. Currently, 8 of the 22 items have been addressed or largely addressed, and 14 remain in progress. South Africa is left with 2 reporting cycles in September 2024 and January 2025 in terms of the action plan. Although foreign counterparties have been applying greater scrutiny for our domestic institutions as a result of the FATF grey listing, the PA has found no immediate negative impact on correspondent banking relationships. It is nevertheless imperative that the action items are addressed timeously to avoid long-term negative effects on the economy. Moving to operational matters, during the year under review, the SARB saw the overhaul of its balance sheet with the introduction of new arrangements governing the Gold and Foreign Exchange Contingency Reserve Account, GFECRA. Announced in February 2024, the new GFECRA framework will allow government to access a portion of these funds to reduce debt issuance, while providing the SAP with a stronger capital position. In June, these arrangements were passed into law with the gazetting of the Gold and Foreign Exchange Contingency Reserve Account Deferral Amendment Act. This act was accompanied by the signing of the GFECRA settlement agreement between the SAP and the Minister of Finance. The agreement ensures that, amongst other conditions, the SAP's solvency is not undermined by any GFECRA profits distribution. These distributions will be used to reduce government borrowing. There will be no sales of foreign exchange reserves if such reserves are below estimated adequacy levels. As of 1 July, 100 billion rands had been transferred to the South African Reserve Bank, and roughly 3/4 of the 100 billion due to the National Treasury this year has already been paid out. We expect to complete the transfers by mid-August. The SAP is the custodian of South Africa's national payment system. In the past, payment systems were often viewed as the boring plumbing underpinning a central bank's work. But with the rapid advancements in financial technology, payment systems globally are instead becoming central to innovation, enabling more digital transaction offerings, reducing the reliance on cash, and providing new ways to drive financial inclusion and economic development. The recently published Digital Payments Roadmap outlines the key interventions that the SAP, together with the public and private stakeholders, will implement to advance efforts to improve digital payment adoption by consumers. The SAP's Payments Ecosystem Modernization Program will further support efforts to make domestic payments cheaper, faster, more reliable, and more accessible to underserved communities. The program includes the establishment of a new centralized public payments utility and the renewal of the domestic settlement system, namely the South African Multiple Option Settlement System. The SAP will also implement foundational enablers such as a digital financial identity for consumers. Alongside modernization efforts, the SAP remains committed to ensuring that our payment and settlement services continue to serve the industry effectively and efficiently. To this end, in June, we successfully migrated the Southern African Development Community's real-time gross settlement system to the ISO 20022 Global Financial Messaging Standard. The ISO 20022 is an open standard for payment messaging that creates a common language and model for payments data across countries. The adoption of this new standard by the SADC RTGS and its participants comes well ahead of the global November 2025 deadline. In its day-to-day operations, the SAP procures a range of goods and services. Its procurement strategy is focused on fair, equitable, transparent, competitive, and cost-effective purchasing. Although the SAP is exempt from the Preferential Procurement Policy Framework Act, it nevertheless applies preferential procurement principles in its sourcing and procurement activities. This year has been the first of a 3-year broad-based Black economic empowerment strategy, demonstrating our commitment to maintaining and improving spend with qualifying suppliers. The bulk of the SAP's 4.7 billion rands in spending, or a little over 91%, went to local suppliers. Using the generic Codes of Good Practice scorecard, the SAP achieved 21.6 out of a possible 27 points in terms of the recognized BEE Act. Information and technology infrastructure is critical to the functioning of the SAP. The rapid changes in how we use and process information affect every facet of our work. The proactive management of the SAP's networks and systems has ensured that the mission-critical business applications have remained up and running 99.9% of the time over the past year. The resilience of our systems has been enhanced by initiatives such as the redesign of our data centers and network modernization. We are also working to build a workforce of the future, strengthening our cyber team to build local and regional resilience to cyber incidents. Our commitment to serving the economic well-being of all South Africans is also evidenced in our corporate social investment program, which focuses primarily on education. At the heart of this work is our external bursary program, which aims to develop human capital in the fields of monetary policy, financial stability, data science, and economic journalism. In 2023, the SAP sponsored 110 students, 63 continuing bazaars, 35 first-year bazaars, and 12 students studying towards their master's degree in data science. 86% are from previously disadvantaged backgrounds and 63% are female. The importance of the SAP's role in our economy demands the utmost from its staff members. Without their commitment and expertise, the central bank would not be able to achieve its strategic objectives or to deliver on its mandate. To ensure that the staff continue developing their professional skills, the SAP spend on training increased to almost 6% of total payroll in the 2023-2024 financial year. More than half of the employees that received training, or 56%, were women. Diverse organizations which reflect the societies they operate in are typically more successful. Having rolled out the third phase of its diversity and inclusion program, the SAP has incorporated a diversity and inclusion accountability framework into its performance scorecard and ensuring it is embedded in everything that we do. At the same time, our staff experience is being steadily improved through the digitalization of our people management systems. To conclude, the year ahead will throw new challenges the SAP's direction. Our international activities will receive particular focus as South Africa takes up the G20 presidency. Together with National Treasury, the SAP is gearing up to co-chair the finance track from December 2024. It will focus on, amongst other issues, global macroeconomic matters, climate change finance, cross-border payments, and capital flows, and finally, the financial inclusion agenda. Over the past year, the SAP has worked to ensure a coherent G20 agenda which is relevant for the country, the G20 members, and the African continent. The SAP is the fourth country in the Global South to lead the G20 presidency before it moves back to an advanced economy. On the regional front, we have prioritized a strategy focused on the integration of SADC member countries and our role as the chair and secretariat of the SADC Committee of Central Bank Governors. The year 2025 will also mark the culmination of the SAP's 5-year strategy cycle. The formulation of our new strategy 2030 is currently underway. Whatever the outcome of this process, I can assure you that the SAP will remain in service to the country. We will continue to ensure the cost-effective availability and integrity of our currency. We will continue to ensure that the financial sector safeguards depositors and policyholders. We will continue to enhance South Africa's resilience to external shocks. Above all, we will hold fast to our price and financial stability mandates. Thank you very much. That concludes the address, and I would like to now turn to the formal business of the day, which covers the following matters. First, to receive and accept the minutes of the AGM held on the 28th of July 2023. Secondly, to receive and consider the SAP's annual financial statements for the financial year ended 31st March 2024, including the Director's Report and the Independent External Auditor's Report. Thirdly, to approve the remuneration of the SAP's independent external auditors, namely BDO SA Incorporated and SNG Grant Thornton Incorporated, for completing the audit for the 2023-2024 financial year in terms of Regulation 22.1 subsection B, read with Regulation 7.3C of the regulations. Fourthly, to approve the appointment of BDO and SNG Grant Thornton as the SAP's independent external auditors for the 2024-2025 financial year in terms of Regulation 22.1 subparagraph A, read with Regulation 7.3C of the regulations, and to approve BDO and Ernst & Young Incorporated as the SAP's independent external auditors starting from the 2025-26 financial year. Fifthly, to elect 3 non-executive directors to serve on the SAP's board. And finally, to consider any further business that may arise from the items mentioned in terms of Regulation 7.3E of the regulations. I can confirm that the Secretary of the SAP has not received any requests for special business in terms of Regulation 7.3D of the regulations. I now invite the Secretary of the SAP, Ms. Zoliswa Copiso, to confirm the shareholder representation at this meeting.
I am pleased to confirm that at this stage, the total number of shares in the issued share capital of the South African Reserve Bank is 2 million. 20 shareholders are present, online and in person. 8 shareholders are represented by proxy, and 414 votes are excisable by the shareholders present online and in person, and those holding duly certified proxy forms for this purpose. Thanks,
Thanks, Zoliswa. I've determined that voting on each of the matters under consideration at this AGM will take place by means of a poll. This hybrid meeting, together with the voting procedure, is being facilitated by an independent external party, Lumi. All the shareholders attending this AGM, either in person or online, who hold 200 or more shares in the SAP and who are entitled to vote in accordance with the provisions of the SAP Act and its regulations, will be allowed to vote at any time before the vote is closed. Since this is a hybrid meeting, can I please request Mr. Andrzej Vlada from Lumi to come forward to outline the housekeeping rules and to instruct those shareholders present in person and online on how to use the platforms.
Thank you, Governor, and good morning to yourself, to the Deputy Governors, members of the board, shareholders, guests. Good morning to all of you. As the Governor has said, today's meeting is a hybrid meeting, so we are cognizant that we have shareholders and guests that are participating online, virtually. Today I will explain to both sides on how to engage at this meeting as well as how to vote. So beginning with the voting and starting with those of you in the room, for those that are present and entitled to vote and have chosen to vote at this AGM, you would have received a handset as well as a smart card. If I could ask you to firstly make sure that your smart card is inserted correctly. That's with a gold chip facing you into the top of the handset, and at the top of the screen in the gold bar you should see your name or the organization that you're representing. You'll currently see that the voting is open. So for those that want to fiddle around, you are welcome to, but you can also follow along with me. You'll notice these devices look similar to an old BlackBerry. For those of us that are older in the room, you'll recognize the device. Please note that these are not quite like your smartphones. We've gotten very used to our smartphones being very soft touch on the screen. These are conference devices, so do require a fair amount more love than your smartphone does, so please press the buttons hard when using it. So if you follow along with me, for those of you in the room, you'll see on your screen at the moment is two test resolutions, TST1, TST2. You can use the blue trackball in the middle to scroll between them. I would start on TST1 and press the blue trackball on that resolution. You'll then see the resolution text for that resolution, which says Test Resolution 1. You can then press the green button to vote, and then your voting options appear. You'll press 1 if you wish to vote in favor, 2 if you wish to vote against, or 3 if you wish to abstain from voting. You'll see there is no submit button. You'll automatically get a received message on your screen. Once that happens, you can then press the green button to move on to the next resolution. Again, you'll see the message for that resolution, which will say Test Resolution 2. Again, press the green button to vote, enter in your vote, and then once you press next after that, you'll get a list of the two resolutions and how you voted for them. If you want to change your mind, you can scroll back to one of those resolutions, clear it by pressing X and re-entering your new vote. If you do struggle with the voting at the moment, please raise your hand. One of my colleagues in the room will come and assist you if need be. Other than that, could all of you please try voting on those two test resolutions while I carry on with the explanation. I see Mr. Rousseau has Winston, if we could help Mr. Rousseau here in the front. Right, for those online, it's quite simple. You can refer to the info screen if you want to, but on your screen, it'll automatically appear as an electronic ballot form. You'll scroll through it and you'll just click on the same options as I've mentioned earlier. With regards to the Q&A, when the Governor does ask for any questions, for those of you in the room, please raise your yellow shareholder card. Wait for the Governor to acknowledge you. Please make sure that you turn on your microphone by pressing the green button of the microphone in front of you. Please talk clearly into the microphone so that virtual participants can hear you as well. For those of you online, you can go to the messaging tab, type out a message and hit the send key, and we will then see the questions here in front. Or if you wish to ask a verbal question online, you'll click on the request to speak button that you'll find in your webcast screen and follow the instructions from there. Right, Stephen, are we okay to close the voting? It looks like it. So we will now close the voting on the two test resolutions, and we will view the results of each resolution. So test resolution 1 has been carried with 87.38%, and test resolution 2 has passed with 74.73%. If anybody in the room struggles, please raise your hand and we'll come and assist. For those of you online, if you are struggling, there is a WhatsApp support line as well as an email support line that you can contact to get assistance. And with that, Chair, or Governor, I'll hand back to you.
Thanks, Andrej. We now proceed to the business of this meeting. Voting will start on the first 4 ordinary resolutions, namely the acceptance of the minutes of the 2023 AGM. Secondly, the acceptance of the annual financial statements for the year ended 31st March 2024. Thirdly, the approval of the remuneration of the SAP's independent external auditors in the amount of 22,726,955 rands, excluding value-added tax. And fourthly, the appointment of the SAP's independent external auditors in terms of Regulation 22.1A, read with Regulation 7.3C of the regulations as follows. 4.1, BDO and SNG Grant Thornton as the subs-independent external auditors for 2024-2025 financial year, and BDO and EY as the subs-independent external auditors starting from 2025-2026 financial year. The Subs-Audit Committee has recommended the appointment of the new audit firm, EY, together with the reappointment of BDO. SNG Grant Thornton has been auditing the subgroup for more than 10 years, and its tenure is due to expire on the 31st of March 2025. The Audit Committee's mandatory audit firm rotation policy states that an audit firm cannot serve as the appointed auditors of the subgroup for more than 10 consecutive years. Consequently, SNG Grant Thornton will be conducting its last audit work for the subgroup for the financial year ending 31st March 2025. The Subs-Audit Committee is satisfied with the process of selecting a firm of independent external auditors that will replace SNG Grant Thornton as a new joint external auditor to the subgroup. The new external auditor will conduct the audit jointly with the existing and remaining audit firm BDO. The Subs Board supported the Audit Committee's recommendation to appoint EY and to reappoint BDO as proposed for approval by the shareholders at this meeting. The appointment of EY for the provision of joint external audit services to the subgroup will commence from the 2025-2026 financial year, subject to the annual re-election process that will be followed at the SUBS AGM for a potential maximum period of 10 years. Are there any questions or comments on any of these four matters before we go to the vote? Yanni? The green button.
Thank you, Governor. I just want to make sure that this election of Ernst & Young a year hence, will that serve again at the next AGM for confirmation for 25-26? It's the first time, as far as I know, that auditors have been appointed a year forward and not for the immediate year ahead. So will it serve again, or what is the position? Thank you very much.
I will check the legal position, but the rationale for appointing the year ahead is to enable for the handover so that there is an overlap in the build-up to the 2025-2026 financial year. Lawyers, secretaries, anybody have a clever legal explanation? We will check that and revert during the course of the meeting. Thank you. The polls are now open and you can exercise your votes. And to make sure that everybody has exercised their right to vote, four more to go. The polls are now closed, and the results are as follows. Resolution 1 carries with 452 votes, basically 100%. There are 5 abstentions. Resolution 2 also carries 435 votes. There are 16 abstentions. Resolution 3 carries 100%. No abstentions, no against. Resolution 4.1 also carries 100%. Resolution 4.2 also carries 100%. I now turn to the matter of election of the 3 non-executive directors to the board of the SAP. The terms of office of Dr. Yvonne Muthian, a non-executive director with knowledge and skills in commerce and finance, Ms. Shamima Gaibi, a non-executive director with knowledge and skills in labor, and Mr. Norman Mbazima, a non-executive director with knowledge and skills in mining, expire tomorrow, the 31st of July. All 3 incumbents are eligible and available for re-election by the shareholders. The panel appointed in terms of Section 4.1c of the SAP Act considered the nominations for these vacancies. The panel comprises of myself, retired Constitutional Court Judge Vaitsi Elizabeth Nkabinde, and the Chief Executive Officer of the Ethics Institute of South Africa, Professor Dion Rousseau, both nominated by the Minister of Finance, and Mr. Kaiser Moyani and Mr. Tulani Chifuta, both nominated by the National Economic Development and Labour Council. The panel confirmed 3 candidates for consideration by the shareholders for the 3 vacancies in terms of Section 4.1g of the SAP Act. The panel is satisfied that all 3 candidates are eligible as well as fit and proper to stand for re-election as the directors of the SAP. The curricula vitae of the 3 candidates were sent to the shareholders together with the notice of the meeting. I now turn to the election of a non-executive director to fill the vacancy for a person with knowledge and skills in the field of commerce and finance. Dr. Yvonne Muthian was the only candidate selected for election in this category. Please exercise your vote by voting for or against Dr. Muthian or abstain from voting. Are there any questions? Okay, there are none. The poll is now open and we will proceed with the director election. Five more to vote. Four to go. Three to go. The voting is now closed and the results are as follows. The resolution carries with 98% of the votes. On the basis of these results, I declare that Dr. Muthian has been re-elected as a non-executive director with knowledge and skills in commerce and finance. Dr. Muthian is congratulated on her re-election as a non-executive director. In terms of Section 5 of the SAP Act, this appointment shall be effective from the 31st July 2024 to the day after the AGM in 2027. I now turn to the election of a non-executive director to fill the vacancy for a person with the knowledge and skills in the field of labor. Ms. Shamima Gaibi was the only candidate selected for election in this category. Please exercise your vote by voting for or against Ms. Gaibi or abstain from voting. Are there any questions? There being none, the poll is now open and we will proceed with the election of the director. 3 to go. Two. The poll is now closed, and the results are as follows. The resolution carries with 89.41% of the vote. On the basis of these results, then I declare that Ms. Gaibi has been re-elected as non-executive director with knowledge and skills in labor. Congratulations, Ms. Gaibi, and this appointment will be effective from the 31st of July 2024 to the day after the AGM in 2027. I now turn to the election of a non-executive director to fill the vacancy for a person with knowledge and skills in the field of mining. Mr. Norman Mbazima was the only candidate selected for election in this category. Please exercise your vote by voting for or against Mr. Mbazima or abstain from voting. Are there any questions? There being none, the poll is now open and we will proceed with the director election. Four to go. 3. Two. The poll is now closed, and the results resolution carries 99.45% of the polls. On the basis of this voting, I declare that Mr. Mbazima has been re-elected as a non-executive director with knowledge and skills in mining. Mr. Mbazima is congratulated for his re-election as a non-executive director. In terms of Section 5 of the Sub-Act, this appointment shall be effective from the 31st of July 2024 to the day after the AGM in 2027. This concludes the voting procedure for the day. I would like to thank Lumi for their assistance and contribution. As mentioned earlier, the Secretary of the SAP has not received any requests for the from shareholders for the special business to be placed on the agenda of this meeting in line with the regulations. Are there any other questions or comments arising from the matters under consideration at this meeting? Okay, Mr. Rousseau.
Thank you, Governor. Let me just start by saying that I really welcome the Corporation for Public Deposit, Corporation for Deposit Insurance, for the simple reason that South Africans seem to have believed that we had something like this for the last century. So from that perspective, I feel it's a very positive development. So when I ask my question, it's against my positive view on the corporation. What is not clear, and I've asked a few people and I couldn't get the final answer. There's deposit insurance up to 100,000 rands for a deposit. Something went very wrong here. Can you hear me, Governor?
I can hear you, but I'm concerned about the people online. Continue. Yeah, the microphone. Yeah.
The deposit insurance is up to 100,000 rands, but what is not clear, and I've asked a few people and I couldn't get a final answer, is this per institution or per deposit per institution? In other words, if I have at Bank A 3 deposits, each of 100,000 rands, am I covered 3 times up to 100,000 rands, or am I only covered once up to 100,000 rands, despite the fact that there are 3 deposits each of 100,000 rands? And I just cannot get final clarity, so thank you very much.
Thank you. I'll start. The best way for you is to have 3 deposits in 3 banks. You are only covered once. So in an institution, you are covered up to 100,000, irrespective of how many accounts you hold with that institution. And if there are more questions, if you have more questions, I decided to bring reinforcements. The CEO is here, so she. And then there is a question from Benny Manyala online, which asks about why we still have physical share certificates in this era of digitization. It's one of these things where the law was written in a particular way. The only way to digitize is for us to go and amend the sub-act so that we are in line with what we are seeing. So that is the reason. And then Benny also had a second question that says, how is the inflation target determined and what factors are taken into consideration? The inflation target is determined through a process jointly run by the bank and the National Treasury in a committee called the Macroeconomics Standing Committee. In arriving at what would be an appropriate target for South Africa, cognizance is taken of South Africa's previous inflation performance, South Africa's previous economic performance, and how South Africa compares with peer countries. And so we have got to compare with other countries. Why? Because inflation differentials determine competitiveness of countries. If our inflation is higher than that of peers, that means that our currency is continuously losing value relative to those countries. To quote a shareholder of the SAP, inflation is ungood. And so what we got to be cognizant and be clear of is that there is no virtue in high inflation. Inflation erodes the purchasing power of the currency. And that is why the Constitution tasks the South African Reserve Bank with the responsibility of protecting the value of the currency. And that means keeping inflation low, and importantly, that our inflation should be in line with that of our trading partners so that we do not erode the competitiveness of the South African economy. That is what is taken into account. Are there any other questions? I don't see any online. I don't see any yellow cards. Well, thank you very much for your attendance. I understand that Mr. Sim Shabalala, the Group Chief Executive of Standard Bank South Africa, would like to address the meeting. Mr. Shabalala, sir.
great privilege to rise this morning to move the vote of thanks. I propose that we celebrate the Reserve Bank's continued excellence in pursuit of every element of its mandate. The Reserve Bank continues to be recognized as one of the world's most skilled, effective, and credible monetary authorities in the world. It is beyond doubt that the Reserve Bank can and will always do what is required to keep inflation expectations anchored well within the target range. To see this, it is instructive to take a longer view. CPI has stayed well within the Reserve Bank's target range for the vast majority of the last 15 years. Then, since 2020, the pandemic and increased geopolitical tension have together provided a textbook challenge to monetary policy. What happens when a central bank is confronted by large exogenous shocks to prices? The SARB has given us the answer. A truly credible and independent central bank brings inflation back down into the target range in short order. And it can do so without having to resort to excessively high real policy rates. The Reserve Bank provides a solid and dependable policy anchor through challenging political and global cycles. This reduces the costs and risks of borrowing. It makes more investment possible. It enables easier and more confident decision-making by all South Africa's economic actors. Standard Bank, therefore, wholeheartedly endorses the Reserve Bank's view that low and steady inflation is conducive to faster, more sustainable, and more inclusive economic growth. Turning from monetary policy to prudential regulation, the Reserve Bank's prudential authority continues to be regarded, quite rightly, as one of the strongest and most advanced prudential regulators in the world. The SARB has played an important global role in the development of the final Basel III requirements and will be among the first countries to achieve full adoption of the Basel Endgame. Further, the Prudential Authority is one of the leading global voices on the single most important issue facing humanity as a whole, the management and mitigation of climate change. The PA is doing globally important work in developing central banks' approach to the management of climate risk and in supporting the growth of sustainable finance. The Financial Stability Department also continues to do work of great national importance in analyzing and developing the South African systemic risk management framework. Overall, the Reserve Bank's very thoughtful and highly systematic prudential and risk management work bears fruit in the soundness and stability of the South African banking system as a whole. Experts and industry insiders understand the SARB's achievements in terms of such things as capital and liquidity ratios, stress tests, and resolution plans. We also have daily experience of interacting with the punctilious and probing officials of the PA and FSD. They are like the police from time to time. But all South Africans experience the immense competence of these departments in another way too. Despite all the economic shocks and political uncertainty South Africa has experienced, despite the chronic social and economic vulnerabilities caused by extreme inequality, there is complete public confidence in the soundness and efficiency of the financial system. The system as a whole is immensely robust, and all South Africans know this in our bones. I would also like to draw attention to the excellent work that the Reserve Bank has done this year to increase the probability that South Africa will be removed from the FATF grey list in the course of 2025. Along with their colleagues at the National Treasury, this is yet another example of the SARB being among the most constructive participants in South Africa's national life. Similarly, I would point to the continued excellence of the payments cluster, which quietly, yet very effectively, keeps our economy's transactions running smoothly. I must also commend the banknotes and coins team, which makes a valuable and too often overlooked contribution to maintaining our national identity, supporting social inclusion, and combating crime. It is also very important not to overlook the work of the research and statistics departments. These provide a truly superb factual and analytical base, not only for monetary policy, but for understanding the economy as a whole. To paraphrase Keynes, practical bankers and business people who believe ourselves to be quite exempt from any intellectual influence are usually in thrall to the MPC statement and the quarterly bulletin. This brings me to a final excellence of the Reserve Bank for which I would like to invite our thanks. This is the exceptionally high quality of the SARB's communications to all of its stakeholders. I would particularly like to draw attention to the Governor's keynote address to the FSCA conference in March. Such a brilliant speech, matched only by the excellence of the Governor's speech this morning, let me add. In that speech in March, the Governor discussed the interactions between technical excellence and perceived fairness. As the Governor pointed out, technical correctness is highly vulnerable to popular pressure unless people feel that technically correct decisions are visibly, directly, and quickly helping to make their lives better. The SARB regularly makes the point that South Africa's technical excellent financial sector is also, quite clearly, a powerful force for inclusive national development. This is yet another reason to thank the Reserve Bank for its work. But I submit we should go further. Those of us who are privileged to have some influence over the performance of the economy are quite rightly expected by our fellow citizens to do these things. 3 things. First, we're expected to do what is technically correct. Second, we're expected to do what is clearly and directly in the service of society. And on this, I must commend the Reserve Bank on its contribution to transformation under the broad-based Black Economic Empowerment Act and to diversity and to inclusion. Third, we are expected to explain what we are doing and why we are doing it in a transparent and accessible manner. We would do well to emulate the SARB's capacities in all 3 of these dimensions. With that thought in mind, it is my immense privilege to propose the vote of thanks to this year's annual general meeting. Many thanks.
Well, thank you very much, Sim, for those very, very kind words. The staff of the bank is following the proceedings online, and I am sure they are jubilant from those words. To the best of my knowledge, all the business included in the agenda for today's meeting has been transacted. I would like to thank President Ramaphosa and Deputy President Mashatile, as well as the government and the Parliament of the Republic of South Africa for their continued support. The sound working relationship between the National Treasury and the South African Reserve Bank has continued, and I would like to thank the Minister of Finance, Mr. Enoch Godongwana, the Deputy Minister of Finance, Dr. David Masondo, and the Deputy Minister of Finance, Mr. Ashore Sarupen, the Director General, Dr. Duncan Peterse, as well as staff of the National Treasury for their ongoing support. Sincere appreciation is also due to the Deputy Governors, Chasivana Kasim and Mudise, as well as the entire management and staff of the SARB for their continued dedication and support. I would like to thank them all for their contributions, and I'm confident that their continued efforts will ensure that the coming year is even more successful. Thank you to all the shareholders and guests for your attendance and participation at this meeting. I trust that the SARB can continue to count on your support in the future. Justice would not be done if I do not thank the board of the SAP, in particular the non-executive directors who are providing governance oversight of the bank and keep us honest. Thank you very much for your support throughout the period and for at all times taking concrete, bold steps that protect the integrity of the institution that is held so dear by South Africans. And South Africans do owe you a deep sense of gratitude. Thank you very much. With that, I now declare this the 104th Annual General Meeting of the shareholders of the South African Reserve Bank closed. Shareholders and guests will all be ushered to the Amber Dining Hall where refreshments will be served. Thank you very much for your attendance.